One of the most misunderstood stories in Alberta and in Canada, really, is the disaster that is oil and gas environmental liabilities. The estimates vary, but it could be as high as $260 billion of unfunded liabilities. We've been following this story for a number of years now here at Energy Media, and one of my favorite experts is Mark Dorin, who is very well versed in administrative law related to oil and gas and has been working on what's called the Mature Asset Strategy, which is a proposal from the provincial government that would be administered by the Alberta Energy Regulator. Welcome to the interview, Mark.
Thanks for having me, Markham.
Well, it's good to see you back, and but not about this topic because when Danielle Smith, prior to her becoming premier in 2022, she had this thing called R-Star, a
Yes.
proposal. And it would have cost the provincial treasury probably in the neighborhood of $6 to $10 billion, depending on how it all played out. And it was the government would subsidize the reclamation of old, non-working oil and gas assets like oil wells. How did that mature, or how did that transition into this mature asset strategy?
Well, I'm not too sure, but R-Star seems to have gone by the wayside for this new thing called Mature Asset Strategy, which is kind of like R-Star on steroids, because R-Star certainly would have cost the taxpayer some money in giving away mineral resources for free, but the potential cost of the Mature Asset Strategy just dwarfs the cost of the R-Star, and the people were dead against R-Star because it was using public dollars effectively to help oil companies clean up their mess, if you will. And now we don't really know, if everything under the Mature Asset Strategy will be implemented, but it seems to be a workaround about against almost virtually all the polluter pay laws in Alberta. So it would be a potentially gigantic expense for the citizens of Alberta if we, in fact, implement this mature asset strategy. And according to the mandate letter issued yesterday from the Premier to Energy Minister Brian Jean, they're going ahead and with full implementation of that mature asset strategy report.
Yes, this is so much. This is the UCP strategy. You present something, it doesn't get a good response from the public. You sort of retrench, and then you come back months later with exactly the same strategy with a different name and a different way of implementing it, and but you get to the same end. In this case, seems to be even worse. So, one of the things that you've done, and I think the public needs to know about this, is there have been public meetings that have been held in various parts of rural Alberta about the mature asset strategy and the government's position. The strategy has not been well received, right?
That's correct. We mostly through an organization called CARE, that's fairly new, a coalition for responsible energy. We held two town halls so far. One was last night virtually, that was well attended and very well done. And then we had a pilot project in Didsbury in mid-August. But I've also been holding a series. I'm part of the Warburg Pembina Surface Rights Group. We've held four meetings there. And we've had, first of all, the head of the Rural Municipalities Association, Kara Westerland, spoke. Then we had CARE speak after that. Then we had Najwan Al-Junaid, the shadow minister for energy, speak. And then that attracted Mr. Vitor Marciano, who's the chief of staff for Energy Minister Brian Jean, and he was the last one to speak. The next one is October 16th, and we're going to have Mr. Bill Heidecker, head of the Alberta Surface Rights Federation, wrap up our series on mature asset strategy. But we attracted the Narwhal came to two of those meetings. There was a big article published on the last one that we had where Mr. Marciano spoke, and there was significant pushback. Significant that if the government thinks that it advanced its mature asset strategy in that meeting by sending Mr. Marciano out, and actually the author of the report, Mr. David Yeager, came to Warburg as well. If they think they advanced their strategy, they're mistaken. So there was significant pushback as reported by the Narwhal, and that was very accurately reported.
We should talk about these two individuals because Dave Yeager is the former president of the Wild Rose Party of Alberta back in the days when Danielle Smith was the leader. He's very much her right-hand man when it comes to oil and gas matters. And now she's appointed him to the board of the Alberta Energy Regulator. And Vitor Marciano I believe he's the chief of staff for Energy Minister Brian Jean. And so
Yes.
his presence at these meetings is not insignificant. And tell us a little bit more about what he said and how it was received by rural landowners.
Well, what Mr. Marciano did was try to explain what's a rather complex strategy report. There's 21 recommendations in this strategy report, and we had heard that all but one were being adopted by provincial cabinet. Mr. Marciano told us that I think seven of these recommendations have been approved so far, and the rest are sent for more further study. That was told to us in the last meeting in mid-September. But according to last night, all of them apparently are being implemented now. So, uh, they admitted that there's serious problems out there. Mr. Yeager, in particular, called this mature asset crisis we have, where only about 12% of the wells drilled in Alberta are still economically viable. He called it a gigantic, stinking pile of shit. That's how he framed our energy industry. And there was a lot of pushback from landowners that aren't being paid in particular. So they said that they would clamp down, and they particularly said they would clamp down on these bad actors. But everyone said, look, you have tools to do that today. Like, why aren't you using the tools? For example, why isn't someone that has authority, one of these bodies, once the taxpayer is paying the landowner and the well's just sitting there idle, why don't they ban the oil company from entry on that land like they're supposed to? When the taxpayer is paying the bill, they're supposed to suspend their rights to be on the land, but they're not doing that. They're not using their enforcement measures. So they promised to start enforcing, but they said, look, this is not our problem. We inherited this problem. They blame it on others. And the mature asset strategy blames the oil and gas industry's decisions on things like, market price of oil and gas, et cetera. It's pathetic. But, they said, give us time. We'll fix this, but you're going to have to trust us and you're going to have to give us time. And that's essentially what their message was. Give us time. We'll fix this. We promise. Trust us.
Yeah, I think we should talk a little bit about the magnitude of this problem. And you very kindly provided the latest updates on the number of wells. So let me just quickly go through this. Total wells drilled in Alberta, 474,000. But the numbers that really are relevant here are the active but marginally commercial 94,800. So we'll say 95,000. Those are ones that are producing 10 barrels a day or less, and they're going to be uneconomic and have to be shut in fairly soon. Then we have inactive and decommissioned wells, sites yet to be reclaimed, 175,480. That's 37% of all of those wells just by
Yes.
themselves. So there's a very, very large number of wells that have not been reclaimed, and then there's a very large number of wells coming behind them that will need to be decommissioned and reclaimed. And it's just overwhelming the number of these that have to be done. And that's not talking about facilities like natural gas processing plants that have been abandoned or pipelines or other facilities. Add it all up, and it's a mess. And I think that the comments that you attributed to both Dave Yeager, well, particularly Vitor Marciano, it's very consistent with the way the industry has talked. They make themselves out to be the most responsible oil and gas industry in the world, and yet what's going on behind the scenes that nobody ever talks about publicly is exact opposite of that.
Yeah, that's true. And the problem is that they've been allowed to kick, retirement obligations, which fall into different categories of these wells. They've been allowed to kick the can down the road, and they continue to do so. And that's really the big problem. The longer we allow that to occur, the less chance there'll be that these companies can fulfill their obligations. You tie in with that the fact that we have this orphan fund safety net and it's underfunded. So that just means that these wells sit there even for a long time, even once they're in the care of the orphan fund. Once that's occurring, the taxpayers are paying the landowners for the loss of use and of that land. So it's cost, underfunding the orphan fund costs taxpayers money. This could all end up in taxpayers' laps. But the big push on this mature asset strategy was oil companies more or less saying that we have some sort of a guaranteed right to profitability at everyone else's expense, at landowners' expense, at the expense of municipal taxes that we're not paying, at the expense because they're saying that landowner costs and municipal taxes are the difference between profitability and not being profitable. In other words, they're blaming their their gambling decisions on landowners and municipal governments, which is just unfair. This is just not, you know, it's not it's not sustainable. So this is what they want to do. They just want to return to profitability at other people's expense. And the Mature Asset Strategy report, it focuses a lot on trying to get the income of these companies up and trying to get blood from a stone. How are we going to get more production from mature assets? That's what they're trying to do. So
We need to put some important context in here, Mark, and that is that all, particularly public companies, and the big ones and even the smaller ones, are under intense pressure from investors to return as much money to the investors as possible. And we see this in the form of demands for higher dividends and for share buybacks to support the share price. And so the companies, even if they are profitable, they're under pressure from these investors because the investors say, we won't give you any more capital, we won't lend to you, we won't invest in you if you don't do this. And then the company goes and says, well, okay, we have to give all of our net cash flow, our free cash flow to our investors. And sorry, we can't pay our taxes, we can't reclaim our wells, we can't do all of these other obligations. Sorry, the public has to pay for it. And that's essentially what they're saying, right?
I think so. But from the rule of law point of view, who else gets to do that? No one. Why do these oil companies, especially the most broke insolvent ones, and let's face it, insolvent oil companies do things that solvent companies wouldn't do. They operate poorly. They don't care. They have nothing to lose. They're the ones that cause a lot of damages. So, allowing these companies to operate when they're insolvent, it's just craziness. There's no justification for it whatsoever. And there's hundreds of these companies there's at least 300 companies that are insolvent that hold well licenses. And most of these companies don't even have employees. Nobody's checking on these wells. These wells are risks out there to human health and the environment and everything else, and nobody's looking after them. And because we don't want to overload the Orphan Well Association, they just sit in limbo. So I don't know. It's a big problem. And this mature asset strategy, if they don't increase these companies' profitability, which is probably impossible, what's their plan B? They don't have one. The problem just gets worse.
I want to talk about something called moral hazard. And that happens where, in a case like this, the company or the sort of the industry is claiming it's overburdened, it's throwing its obligation, wants to throw its obligations onto the taxpayer. And the problem is you do it once, and how do you say no the second time, and the third time, and the fourth time? It becomes a very slippery slope. And doesn't, in addition to the amounts that the government would pay to reclaim these wells, the moral hazard, in fact, may be the longer term danger here, because once it starts, you'll never stop, and the amounts of that would be required are just astronomical.
I agree. And it seems like the government's got its hand out for everything these days. We even have, the provincial government trying to pay for applying for pipelines as of yesterday. So, the more we give these companies, the bigger handouts they want. They lobby the government incessantly. Here's the big problem. Taxpayers aren't lobbying the government. Landowners don't have the funds to lobby government like what industry does. There's this constant lobby, $50 million a year lobby or so. By industry, it's relentless, and there's no counter lobby. That's the real problem here. And landowners are supposed to be indemnified for the cost of being just in oil and gas or other activities on their land. Well, we should be able to, recoup either they need to start lobbying or they got to start paying for the landowners lobby. This is where this is might be one of the solutions to this problem in Alberta. But landowners have asked for a small, maybe $25 per well license so that they can educate their ranks, etc., from government, and the government refuses to give landowners anything, let alone we're the ones hosting these activities on our lands. We're the ones, the operator personnel comes and checks on the well for a few minutes a day and they're gone, and the landowner's left to deal with the dangers and the risks and the emissions and everything else. This is all out of skew here. So
Mark, let's wrap
this
up
is a
the.
big problem.
Yes, I would agree wholeheartedly. Well, Mark, let's wrap up the interview with some estimate of what the mature asset strategy might cost taxpayers. Do we have any idea of that?
Well, I think that it's possible that it could cost, the lion's share of what the retirement costs of conventional oil and gas are, which is about half of those liabilities you spoke of. And so, the main figures out there are about 100 to 120 billion dollars for conventional oil and gas. Now, let's be clear, the public's paid very little of that so far, but if there's major change, the public could get left with the lion's share of that, and that's 25 to 30,000 dollars for every citizen in the province, to put it in perspective. So, I think that if the citizens want to pay for this, write the check now. If not, we have to push back on everything like mature asset strategy. We have to absolutely say that the government would uphold the polluter pay principle. Now, they're saying that they're going to uphold the polluter pay principle throughout this, but yet they're bringing in things like what's called Harvest Co., which seem to just be ways around the polluter pay principle and ways around the orphan well safety net. So, uh, we just need to make sure that there's no law changes, and in fact that these polluter pay laws get strengthened and not weakened going forward. That's what we have to do as citizens, or we have to bear the tab. It's that simple.
Well, Mark, we're going to be coming back to you for more interviews because this is such a complex issue, and the mature asset strategy is also complex. So we need to understand that and the implications for taxpayers. But Albertans, if you live in Alberta and you're paying taxes, this is of interest to you. So, Mark, thank you very much for this.
Thanks for having me on.